Stocks oscillate between gains and losses as an eventful week draws to a close. Metals and financials are the big drags, while auto and PSU banks eke out gains.
Lenskart Solutions attracts 147 marquee anchor investors ahead of its opening of the issue of over 7,300 crore rupees. Expectation of strong market expansion in India and potential to grow overseas are key drivers for the eyewear brand.
The board of Swiggy will meet on November 7th to consider raising rupees 10,000 crores via QIP, even as revenues jump and losses spike. The CFO tells CNBC-TV18 that the fundraise is to build a strategic reserve and for growth optionalities.
And in a move to accelerate the adoption of AI in the country, Google will now offer Gemini AI Pro free for 18 months to Jio's over 500 million users. The service, otherwise costing around 35,000, comes with 2 terabytes of cloud storage.
Hello, good afternoon. You've tuned into Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Mangalam Malu as well as Ekta Batra. Good afternoon, Mangalam, as well as Ekta. But not that great an afternoon coming in, though a bit mild of a decline is what you're seeing. Not that bad, but 25,800, that's where the Nifty is at as of now. And that important level that yesterday Mangalam was also highlighting, 25,900, now it's below that. So a bit of a worry comes in that are we going to come back to that level? And 26,000 is what everyone keeps an eye out on. But yes, advanced decline ratio also more in the favor of declines as of now.
Every time we cross past the 26,000 mark, we feel a little itchy, and then, the market moves towards the 25,850 to 25,900, and now at the lower end of that range. Though the good part is it has seen some recovery from the lows, and the mid-caps aren't falling as much. So let's see where that goes. And a lot of these stock result reactions have been incredible. The kind of moves that we've seen, the numbers that have come so far, not particularly disappointing. So mid-caps doing well, market at the lower end of the range. Let's see where we go next week.
Well, yes, guys, for today, at least, yes, we are, a little topsy-turvy in terms of the markets. But if you look at it on a week-to-date basis, the Nifty is absolutely flat. It's not done much on a week-to-date basis. And the broader markets have done better. So the mid-cap index, for example, is up around 1.5% at current reckoning. We do have the small-cap index, which has gained around 1% for the week. And the Nifty Bank, while that's up around 0.4% in terms of a segment, we have the Nifty PSU Bank index, which is really flown away this week. So up around 5.7% currently for the Nifty PSU Bank index. If you look at any of the PSU banks, say from the broader markets, IDBI Bank, Union, Canara, UCO, PNB, all of these stocks are flying away in today's trading session. IDBI at the head of it, up around 7.5%. SBI just about holding with a gain of around 1%. So extremely active side of that market. But let's get to our movers and shakers segment, where we track a whole host of stocks which are buzzing in trade. And first up is TD Power. Vinny, you're looking at that.
Absolutely. TD Power Systems, that's the one that we're keeping an eye out on. The stock is buzzing after its Q2 FY26 numbers, good numbers, but the company has revised its FY26 revenue guidance. Now, previously, they had said that they would get a total revenue of around 1,500 crores in FY26. They've upped it to 1,800 crores because 1,800 crores was a revenue that they were expecting in FY27. So as of now, they could and they will achieve that in FY26. At least that's what the guidance is coming in. They've seen steady inflows in terms of orders coming in for the company, both domestic as well as on the international front. Order book for at the end of September 2025 stood at around 1,587 crores. Order inflows are also up by around 45% on a year-on-year basis. Even for the first half of the full year, we've seen a good increase in terms of order inflows. Revenues, good performance there. Margins seeing a bit of a blip, but 19% is what they're managing to hold on to. So not a concern in terms of the margins over there as well. Good order book, execution, something is that one is keeping an eye out on. That is why the stock is buzzing in trade, and revenue guidance up is also a positive one there.
Right, with that, let's go across to Sonal. She is joining us for Naveen Florence. Sonal, incredible numbers. Stock is up 15%.
Oh, yes. It's a big surge that we are seeing, and rightly so, because the numbers are very strong. It beat estimates on all fronts. Revenues up 46%, EBITDA at 250 crore rupees. We had margins which expanded 1,200 basis points. Profits also, but up 3 times on a YOY basis at 148 crore rupees. All the segments did well. HPP up 38%. We had specialty, which was up 35% this quarter. CDMO up 98% on a YOY basis. And just now the numbers, even the commentary was very strong. In fact, the company went ahead, upped their EBITDA margin guidance to 28 to 30%. And they say there is a possibility of an upward bias on this as well. In FY26, margins are expected at around 30%. They expect better second half across all the segments. And additionally, CDMO will see revenues of $100 million in FY27. Brokerages, they are very positive. UBS has gone ahead, raised the target price to 5,900 rupees a share. They have a buy call. They say the company has announced new R32 capacity, which will be the next key driver in terms of growth for the company. Jefferies has a buy call with a target at 66.35. They've upgraded the FY26-27 EBITDA by 13 and 14%, also forecasting 44% EPS CAGR over the next 3 fiscal years. Citi, however, is not so bullish. It has a sell call with a target price of 4,900 rupees a share. But yes, good numbers from Naveen this time around.
Yes, absolutely. Stock has absolutely flown away with a gain of around 15% Thanks very much for that, Sonal. But Mangalam, well, United Spirits, you're looking at that one.
I am looking at that one. You know, United Spirits has actually been the third alcohol bev company, which is a non-beer company, which has actually done a lot better than what the street was anticipating this time around. That's largely because of the tailwinds that continue to come in from Andhra. Remember, for United Spirits, the expectations were slightly muted because of its high exposure to Maharashtra, where the policy changes could have been, you know, a sentiment dampeners, but a favorable base offset that. So all you were left with were tailwinds. But more importantly, not only are people, you know, drinking better, the benign raw material prices also have boosted their margins. So it's near record high margins coming in for them, 21.2% as against 17.8%, which the street was anticipating. So put those numbers into perspective, 11.5% revenue growth year on year, 32% net profit EBITDA growth, and net profit growth of 41%. On all parameters versus our expectations, the company has outperformed and outperformed street's expectations as well. Prestige and above, the premium part of the portfolio, that has seen volume growth of 8% as against street expectations of 6 to 7%. So that's a positive. Popular volumes also came in at 6%, pretty much in line with street anticipation. But importantly, what drove their business, 7.5% overall volume growth, but we had 4% realization growth coming in and gross margins up nearly 200 basis points. So all these factors doing well for United Spirits. But from Daru, we move to Dawa. Ekta, tell us about lupin and Zydus.
Well, this is a drug for an overactive bladder that we're talking about, Mybetriq, which is actually a huge blockbuster drug in the US. But nonetheless, Lupin and Zydus are selling this particular drug in the US, and what they have, or what the indication is that the innovator of the drug, which is Astellas, has said that they are quite bullish on this particular drug. So they've raised the guidance for this drug. They've raised it by around 80%. And they say that they will not be hard on the patent case. Now, the patent for this particular drug expires in March of 2030. Now, the read-through for Lupin and Zydus is expected to be positive because they are selling this particular drug in the US. I'll come to the background in just a bit. So the read-through is positive, as the commentary indicates increased offtake for the molecule in the US market. Now, the drug, like I mentioned, is used for overactive bladders. It was launched at risk in April of 2025. The combined market size for the drug is around $2.4 billion as of Feb 2024. In April of 25, the US court had ruled in favor of Astellas, blocking the companies from selling the generic version. But Zydus and Lupin continue to sell this version of the drug as the litigation is in appeal. So that's the reason why these stocks are in focus. But let's now go across to Vivek, who's here to tell us about all the buzzing stocks that are moving in trade this Friday afternoon. Vivek.
Well, thank you so much for that. At least in the broader end of the markets, earnings reaction, like you mentioned, has been quite significant, very strong volumes across most of the companies that declared earnings post-market hours yesterday. Well, you spoke about some chemical names, you spoke about alcohol companies doing very well, but have a look at one pack from the oil space. So, Chennai Petro, one of the top movers as far as NSE 500 index is concerned. We have good volumes. Over 6% higher, very strong GRMs, remember, in Q2. PSU banks, the entire basket, have a look at Union Bank, Canara Bank, UCO, PNB, IOC, multiple factors here, an FDI, likely FDI. Apart from that, few of these names may also make it to the Nifty Bank Index post SEBI's consultation paper last evening. So on the back of that, the entire pack doing very well. On the other hand, quite a few laggards as well. Bandhan Bank, very weak set. And Street, rightly punishing this particular name. Have a look at Cipla. Cipla went ahead and moderated its EBITDA margin guidance for FY26. That stock lower by over 2%. Apar Industries held a conference call last evening. They've highlighted certain near-term challenges as far as Q3 is concerned, especially in the export market. That stock down by almost 5%. And Emphasis, earlier today came out with its numbers. While the numbers were largely in line with what the street was anticipating, there's been a bit of a profit correction, down almost 4% for Emphasis today.
Okay, Vivek, thank you so much for that. But on that note, we're going to actually slip into a very short break. And don't go anywhere, because after the break, we have interesting conversations lined up for you all. So stay tuned for that.
Welcome back. You're watching us here on Halftime Report. The Nifty is still down about 80 points, but let's talk about Pidilite Industries. Reported a good set of earnings. I spoke with Sudhanshu Watts earlier. The consumer business volume growth has risen to about 10.5%. Gross margins improved as well. This is what the management had to say about the way forward.
In particularly our growth categories in the construction sector, we've delivered very high, very strong growths. I think on the second piece which I wanted to talk about is the strength of our portfolio, because our portfolio straddles now up and down and across different categories. And I think therefore our portfolio allows us to consistently deliver this double-digit growth. And lastly, I wanted to also tell you, and I think it's a milestone quarter in that sense, that we begun a very strong move on consumerizing our tile adhesive brand, which is a very fast-growing brand, Roff. And I think if you are a cricket fan or even otherwise, I think between different impact properties, I think Roff is now finally coming alive. So tile adhesives will continue to sort of, grow and be a big growth engine as we go forward. I think this quarter also saw action on Dr. Fix-It and even on Fevikwik, where what we've done is we've introduced a professional range of Fevikwik for different applications and different segments. And this range is under what we call Fevikwik 102, 203, 243, 463. These numbers stand for speed, viscosity, and strength. This range has been received very well. And I think the kind of growth which we are getting and being able to address adjacencies, that's really heartening.
Right. So, I read your statement and you said that the consumer environment looks a lot more optimistic right now. So when it's not as optimistic, you did about 10.5%. When it's optimistic, how much higher can you do?
We will continue to deliver double-digit underlying volume growth.
Double-digit is a wide range, right? I mean, how much higher does... what's the difference between double-digit and an optimistic double-digit, according to you, if you had to quantify that, roughly?
So, Mangalam, if you look at our trajectory over the last... Let me first take about what the last 3-4 quarters trajectory has been. We've added about 100 to 150 bips to our growth. As a matter of fact, sequentially, we've been doing better. I think so that's interesting. I think if the environment is more conducive, we should be able to add a similar number as we go forward.
All right, 150 to 120 bips out there. You spoke about Roff briefly. How big has Roff become right now and what rate it is growing at?
So Roff is growing very rapidly. Unfortunately, Mangalam, I can't share a number because we don't share numbers for specific brands. But I can share with you that our brand Roff is delivering, well ahead of our, and well within that range, but in a very strong 2 to 4x of real GDP number. So I think it is more on the outer side of that band. So that gives you a very good sense of the growth which the brand is.
What's the shift, mix shift been between your growth, core and performance categories, pioneer categories been right now?
So I think we continue to deliver. Now we are at about 48% of growth and 52% core. So I think that mix continues to strengthen as we go forward.
All right. Margins, let's talk about that, because you have this guided band of 20 to 24% margins. You're at 23.9% in this quarter. Do you believe it at the higher end of the range? Because raw material prices are benign. So any more margin savings that come in would be passed on to the consumers to perhaps pump prime volumes from here on?
You're absolutely right, Manglam. I think you've partly seen this in this quarter as well. I think the benefits which we derive on gross margin, and even in this quarter, we had an expansion of gross margin of about 70 bips. But a lot of this has got deployed in advertising and sales promotion. Some of it is building new GTM capabilities, particularly when it comes to architects, some of the newer areas that we are opening up. And lastly, in capability building. And sometimes in case of B2B, it is also passing on some of this to the customers directly.
And B2B business, you said that there were some challenges, but it still grew about 9.9%. So I was just trying to understand, from the mid-teens levels, it came down lower. From here on, have those challenges, seen the end, or are we closer to the end here? Are there any solutions?
Yes, Manglam, you're absolutely right. Your observation is sharp. I think, what has happened is in our B2B business, that the projects end of our B2B business continues to show robust growth. I think when it comes to our B2B business, which has export intensity, some of the B2B business, particularly our pigments business, as you are aware, we also do considerable exports to the Western world. I think that has got impacted by all the uncertainties around tariff. I think with some of it settling, at least partly, and as we are seeing all of us, I think we are very optimistic that as we go forward, we should be able to deliver better growth on that end itself, which got quite affected. So overall, B2B growth will get lifted once again into mid-teens, underlying volume growth.
How long before that happens? That's point number one. And secondly, on margins, do they stay at the higher end of the range for the near future? Because raw material environment is still benign.
Yeah, if the raw material environment is benign, which I think it should be, our understanding for the next 3 to 6 months at least is that it's benign. So we should deliver within our corridor, but more importantly on the higher end of the corridor, Manglam. You're absolutely right. And I think as far as B2B growth uplift is concerned, a little bit this one will be, Manglam, dependent partly on what happens externally and on some of these trade settlements. So I'm saying if tariffs settle down, and if that happens in this quarter, then you'll start seeing results towards this end of this quarter itself. So the timing is dependent on when this gets settled, in my opinion. But our growth in other parts of B2B, domestic B2B, by the way, if I was to break up our B2B, Manglam, just very quickly, into domestic B2B and export-led B2B, domestic B2B is still mid-teens. I can share with you. So I'm very happy. So therefore, that momentum is continuing in domestic B2B. I think it's the export B2B which got quite sharply hit, like you would have seen for some other companies. And that because of this piece, and if this corrects, then automatically you will go there.
Got that. That's good explanation out here. And just a final question before I let you go. The paints business. You keep saying that you will come up with a plan, you will tell us a little more, We've been waiting for so long. Come on, tell us something.
Manglam, I think we are making steady progress. I think the only thing which I can tell is that we were there earlier in 5 states in down south. We've expanded to a couple of states in east as well. And we are looking at some of the slightly urban centers, particularly in the state of Odisha. We're trying to figure some of these things out. But I think we are still working on the business model to be sure that where we are, we deliver our expected milestones, particularly on market share.
What is that milestone?
We've always stated that when we go in the urban areas and small towns where we are there, we would like to be in the top 3 bracket, and we would like to have a high single digit to a double digit market share in these places.
All right. And you've seen that in the 5 towns that you were there, and now
we are seeing considerable sales growth. We are still not satisfied with the share ambition which we had. So I think we need to keep working on our business model and how do we get that sharper and better to be able to deliver that.
And is share the initial target that you have, or will you look at profitable share as well? Because in the paint industry, revenue is very easy to get, not so much when it comes to EBITDA.
So, Manglam, Pidilite, we always want to deliver everything profitably. So profitable growth is almost like a given. So I think your point is very valid. I think we will. So therefore, to that extent, that's important for us. I think if we were to, overlook profitability, it is easy to deliver share. But I think whenever we talk of any number, we always talk of profitable growth. And therefore, you're right. We have to keep an eye on that and then deliver those revenue and share numbers. The good news is that the uplift quarter on quarter is there, which is very heartening. But we are still not close to the threshold we set for ourselves. So we need to do more work on that.
Okay, that was an interesting chat there. Updates coming in from the management of Pidilite. But a quick note for our viewers. As you can see on the screen, there is a money control stock score just above the line graph. And this is the score assigned to each stock based on money control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.
Right, with that, we'll take a short break. On the other side, Ajit Mishra from Religare Broking will join with some trading strategies. Stay with us.
Welcome back. Well, for the markets, it's a quiet day, you'd have to say. So the Nifty is just about lower by around 100 odd points. But just want to point out a couple of stocks that stand out. Cipla, for example, is seeing profit booking for the second straight day. And while Umang Vohra now leaving the company and leaving the company on March 31st, 2026 is definitely a sentiment negative. They have, in fact, revised their margin guidance lower, and that's what is really deterring the street a little bit at this point in time as well. So they're expecting margins of anywhere between 22.75% to around 24% versus 23 to 24% earlier. So that's one of the reasons you're seeing Cipla lower. Sagility is the other one which saw a strong run yesterday, but now coming for some profit booking today, so that stock down around 2.8%. Ajit Mishra from Religare Broking now joins in to discuss the technicals of the market with us. Ajit, hi, welcome to the show. Well, the broader markets have done better this week. Do you have more stocks that you're probably picking out or more of a strategy within that space now?
Yeah, good afternoon, Nikita. So yes, we are seeing some stability, and the good part is that market-wise also we are not seeing any major price-wise corrections. It's the second week that we are ending almost on the flat note, and off late we've started seeing improvement in the broader indices also. Means mid-cap, small-cap, they have also started participating, and the market breadth is also like slightly on the positive side, especially after seeing this noticeable improvement in the FI sentiments as well. So keeping that in mind, the right approach is to stick with the sectors, the themes which are aligned to the market trend, and some of these stocks which are offering fresh buying opportunities. So from the pharma space is something that we like, where we are seeing fresh up move, that is Oro Pharma. It's been almost a year now that the stock has already spent in a corrective phase, and after spending in a very tight range of late, we have seen a fresh breakout in today's session. So we expect improvement in the momentum from the current levels, and 1200 is what we are eyeing as an immediate target. So with stop at 1120, one can accumulate Oro Pharma at current levels. Then we have PSU Banking, which is buzzing. The index is at the record highs. Most of these stocks are also aligned to that move. Bank of Baroda is something that we like from this space for fresh buying, almost on the verge of multi-year breakout here also. And 292 is what we are eyeing as an immediate target. So with stop at 272, one can buy Bank of Baroda also, along with Oro Pharma.
Okay, thank you so much for joining us this afternoon, Ajit, and giving us your views in terms of individual stocks as well as the market. But on that note, we're going to slip into a very short break. After the break, we'll get chatting with the management of IKS Health for the Q2 numbers. Stay tuned in. Welcome back to Halftime Report on CNBC-TV18. Let's put the spotlight on IKS Health. They reported their Q2 numbers. Strong set of numbers that came in Q2 FY26. Revenue growth of 21%. We're seeing EBITDA margin see an improvement as well. What is the outlook of the company? What is doing well for the company? Let's bring on board Sachin K. Gupta, founder and global CEO of the company. Sachin, good afternoon. Thank you so much, as always, for joining us on the show. Let's start by talking about the growth that we're seeing coming in, right? Because in the last few quarters, you were managing in that 15 to 16% growth in terms of revenues. This time, 21, 22% in that range where the revenue growth has come in at. So one, what has driven the growth this time? Was it mainly because of the recent acquisitions? And also, is this 21% growth is what is going to be the new normal now?
All right. Thank you for having me on the show. It's a pleasure always. So on the growth, we've been always guiding that our TAM, which is a very large $260 billion TAM, of which $34 billion has been outsourced so far, is actually growing at 12%. And our thinking has been that as long as we grow faster than 12%, we are capturing market share versus losing market share. And our thinking is this is a multi-decadal unlock of the balance of the big TAM that exists. And so, you obviously saw there was constant currency growth in the 13, 14% range in the first 3 quarters after we went public. This time in the constant currency US dollar terms, the growth is 17%. In INR terms, it's 22%. So it's right in line with sort of what we had thought. And the drivers are purely organic, by the way. There's no inorganic growth whatsoever. And really, this is in spite of the fact that we are continuing to cut a set of customers that are relatively smaller in size from an acquisition that we had done about 2 years ago. So in spite of that headwind of intentionally cutting small customers, we've been able to deliver this growth. And again, a quarterly growth number is something that I don't want to react too much to it. We're still focused on this very large macro opportunity of the unlocking of the TAM from the 34 billion to 260 billion that we think we're going to be a part of here over the next couple of decades.
Okay. Hi, Sachin. Welcome to the show. This is Ekta. Just wanted to get a sense, because your press release indicates that you've significantly accelerated the execution of your AI strategy. You've also appointed a new chief AI officer as well. Just give us a sense in terms of what kind of investments you're making. How are you exactly integrating this AI strategy, and when will it probably show in your P&L?
Yeah. No, hi, Ekta. I think AI actually is taking our platform from that human-led tech in the loop that we had to do all these 16 tasks to an AI native agentic platform is one of the 5 core vectors of our strategy. And we're very happy to report that we've got some real momentum going. You might have also seen a press release recently that was endorsed by Google Cloud, where we've created the first of its kind in the industry, an encounter to reimbursement, interconnected, agentic, largely autonomous workflow platform, which takes 4 of the most strenuous tasks in the physician's workflow and totally eliminates them for the physicians, driving both clinical and financial benefits. And so that's a big testament to our AI strategy. And like you mentioned, our chief AI officer, Ajay Sehgal, who just joined us recently, ex-Microsoft, is really bringing a lot of that acceleration. And the reality is, because our pricing model, Ekta, is outcome-based, as we drive more and more AI penetration in our platform, all of that reduction of human task results in bottom line benefits, which is why you've seen, the sharp increase in our margins to the 35% odd EBITDA levels that we witnessed this quarter. So right in line with our strategy, AI is a core vector of our business execution strategy, and we're happy to note some significant progress on that front.
All right. So, AI is a core growth vector for you. What about Western Washington Medical Group? My colleague did ask you about that, but I believe you skipped that. If you could tell us what the incremental revenues from that deal have been so far. Have you started to realize synergies?
Yeah, so Mangalam, thank you for asking about that. I missed that. So yeah, Western Washington is moving exactly as per plan. And, the full platform is being implemented there. It's on schedule. And, I think we'll be able to track performance over a period of time. We don't want to go into deal-specific numbers, Mangalam, we never really do that. But the strategic importance of Western Washington is that we are implementing our full manifest of the platform there, just like we've done on 2 or 3 other deals we've announced recently. But equally importantly, we are actually on the Western Washington MSO cap table, which creates an additional pool of economics for us as we drive profitability in that MSO. So the strong profit performance that we've delivered this quarter actually is in spite of a small minority loss that has come from that MSO's P&L to us, about 1 crore odd. But that is right in line with our strategy, and our current economics do not include any benefits of that second pool of economics. So as those start to show up as per our plan over the next few quarters, that will be a further accelerant to our profit.
The street is loving what you're saying, because the stock was higher, but now as you're talking about all these opportunities and growth here, it's moved to the high point of trade, and this in an otherwise wobbly market. There you have it, 6.5%. So what about new clients? How many have you added this quarter? What's your plan here over the next couple of quarters?
Yeah, so we've announced 4 new clients this quarter that we've publicly released. Very exciting clients. One is one of the largest health systems in the US called Advent Health, where they were a client of the company we acquired 2 years ago. Now, one of our biggest growth thesis is being able to cross-sell our platform into the legacy Acuity customer base. So Advent is a fine example of that. We've done a platform deal with Revere Health, one of the largest multi-specialty groups in the state of Utah. Another very interesting customer addition. And then Jackson Clinic, which is also one of the largest multi-specialty groups in the state of Tennessee, is a large acquisition. And then last but not the least, a very exciting leading cardiology group in the country that has embraced our platform as their entire core operating chassis in a 10-year commitment is the 4th one. So strong customer acquisition momentum across the board.
Sachin, just a quick one. Given that United Health is your client, I believe recently one of their companies had launched something more related to AI and new digital side. Does that in any way impact the company, or how does it work now with your deal as well then?
Thank you for the question. Somebody asked that on the earnings call as well. So essentially, when you think of United Group, one of their subsidiaries is a company called Optum Insight. There's another that has another subsidiary called Optum 360, and they bring all these technologies for the hospital market. Now, as you remember, we are very focused on the physician market. And they have a $100 billion business called Optum Health, which is the largest employer of physicians in America. That $100 billion business is actually our client. And that's where we provide our physician platform to Optum Health, which is very different from the platform that they've launched for the hospital business in Optum 360, where they are a provider to hospital services, to hospital enterprises. So really no direct conflict there. And, obviously, as you've seen, United Healthcare is under a lot of pressure to continue to drive more efficiency in their business. And that Optum Health subsidiary is our large client that we work with. So we continue to see robust momentum there as we continue to enhance various features of our physician plan.
Sure. All right, Sachin, run out of time, but not out of questions. So I'm sure we'll revisit this conversation later. Thanks very much for joining in and speaking with us. So that's IKS Health. As you can see, the stock has moved up as we during the conversation, actually, and the stock is in fact at the high point of the day, up around 6.6%. We'll take a short break, move away from equities for a bit. We have Manisha Gupta who will be joining in to take us through a conversation with Jeffrey Christian of CPM Group.
All right, let's enter focus on the precious metals space now with both gold and silver off their respective life highs, trying to understand whether these metals can resume their bull run going forward. Earlier, Manisha Gupta caught up with CPM Group's Jeffrey Christian to make sense of these prices and the triggers behind them. Take a look.
The U.S. shutdown, government shutdown, is extremely problematic for the overall economy, both within the United States and on a global basis. Every week reduces U.S. economic output by 0.1 to 0.2%. So we have already shaved up to 0.8% off of our GDP, and our GDP was already suffering from reductions in employment, reductions in business investment, reductions in the housing market, and reductions in a host of other applications. So we already had a tenuous economic outlook, and we were tilting toward a recession. The lockdown doesn't help on a short-term basis and sort of helps push us toward that recession. But in addition to that, on a long-term basis, it severely reduces the credibility of the U.S. government and increases the uncertainties and anxieties that investors and corporations and consumers have around the world. And that will reduce economic activity, not just in the United States, but globally as well, because people are very much concerned about the stability and the direction of the U.S. government.
There are just so many factors, Jeffrey, that are at play right now. So looking at all of these, what is your sense on where is the gold price is going to end this year and a potential price range then for next year?
We wouldn't be surprised to see $4,500 by the end of this year, possibly somewhat higher. At some point in 2026, we're expecting that the quarterly average price may average $5,000. You know, when we think about when we make our price projections, we have short-term price projections, which are intraday, or, you know, this is where we think the price will be this month. But then when we start going longer term, we look at quarterly price projections out over the next 2 years. And then once we go beyond 2 years, we look at annual price projections. And so from a perspective of where we think the price of gold will be in 2026, we wouldn't be surprised to see the price approaching $5,000 on average. And you have to understand that average, and right now the price, you know, we've gone through 10 months of 2025, and the average price is something like $3,600. So people will say, well, the gold price was $4,400 this year. Yeah, for a day or 2 days, actually. But, you know, the average is much lower. So if we're saying that we think that the price could approach $5,000 on average next year, that suggests a range that has the gold price going significantly higher than $5,000 on an intraday basis.
Yeah, okay. Jeffrey, a lot of people have bought into gold this year, and that's because they have seen higher returns. But going forward, what's your sense on ETFs, central bank buying, even retail for that matter?
Well, first off, central banks have been buying less gold this year. I know there are marketing groups that say that the central banks have been buying like 31, 32, 33 million ounces a year over the last 3 years. That's inaccurate. Central banks have been buying between, say, 8 and 15 million ounces a year over the last 3 years. And this year they're running at a rate of about 6 million ounces because of the higher price for gold. So they tend to be scaled down. In the first 9 months of this year, we saw very strong demand for gold, physical gold from investors worldwide, but physical gold, ETFs, futures, forwards, and options. In the last 2 weeks, when you saw the price go from 3,800 to 4,400 and then back down to 3,900 yesterday, what we saw was much lower physical demand for gold. And most of what we saw were ETFs, futures, and forwards and options, pushing the price up and then coming down last week. Those are short-term momentum traders. They were watching the price of gold go from $2,600 at the beginning of the year to $3,600 at the end of September. And they said, okay, this thing is rising more sharply than the stock market, so let's get in there. And they don't want physical gold. They don't want long-term investments. They're looking to get in and be able to get out very quickly. And that means futures, forwards, and ETFs. And that's what we've seen over the last 2 weeks when the price spiked sharply higher and sharply lower.
Jeffrey, before I let you go, I have to get in the silver price estimate going forward as well. That has been quite volatile. Do you see 50 come back in the next year?
We think that the silver price is going to stay high for the rest of this year, the last 2 months of this year, and probably move higher next year. I'm not quite sure what our average price is that we're projecting for 2026 in our various reports. But, we've seen the silver price move as high as almost to $54. It's come back off. It was trading around 48 something before we got onto this call. And our expectation is that while the silver price will continue to be volatile, and we wouldn't be surprised to see a spike sharply lower at some point on a short-term basis, on a long-term basis, we do see fabrication demand relatively high. Refineries are backed up with scrap, old silver investment products that have been sold to take advantage of these high prices. That's going to work through the market, and that will increase the supply over the next 2 months, 4 months, and that could weigh a little bit on silver prices. But again, the major factor determining silver prices, like gold, as with gold, is investment demand. And investment demand is driven partly by expectations of tight silver supplies, but it's more importantly influenced by investors looking at the state of the world, the state of their own local financial banking system stability, the state of their own economy, the state of political security. And all of those factors are unsettling investors right now. We've seen a very sharp increase in investment demand for silver this year, last year, this year, and we expect a further sharp increase next year. So we're expecting silver prices to rise. I assume that as I said, I'd have to look at my reports to see what our most recent projection for the average price is next year, but I assume it's well over $50 an ounce.